Amrita, I've got to be honest, a day after we saw a second consecutive quarter of negative GDP prints here in the U.S., I wouldn't necessarily expect oil to be doing this well. What does the economic slowdown ultimately mean for the balance of demand and supply?
So I think there's a couple of things, right? There is what we would call a technical recession, which is what the U.S. is in right now with the second quarter GDP numbers that have come out. But in terms of oil demand, I mean, employment matters a lot more, and we are really not seeing the kind of oil demand declines that you would expect from a kind of deep recessionary environment. So I do think it's important to put the GDP declines in context for the oil market. I think that's the first thing. The second thing is that there still is a lot of pent-up savings and demand due to COVID. And we've talked about this before as well. Asia in particular still seeing very, very strong demand growth numbers out of there. So overall, I mean, we have already factored in some really steep declines in our European demand numbers and US demand numbers from Q4 onwards this year. But if anything, there's potential gas to oil switching because of very high gas prices that can actually lift demand higher. But even with the kind of European and US demand declines, we still have global demand growth at 900,000 barrels per day year on year next year.
So would you say then, for those who are not so focused on just the energy markets, Amrita, would you say that maybe more broadly in the market, recession fears seem a little overdone, given what you're seeing in the oil space?
Yes, I really think it will matter from sector to sector, right? And employment, and given how tight the labor market is right now, if employment is the biggest driver of oil demand, given it's kind of linked to transportation, that's the key factor and the key variable that markets really need to look at. Of course, is the economy slowing down? 100%, 1,000%, I would agree with that. But it doesn't mean that we are going into an 08-09 style recession. I do find, talking to traders in the market, they always tend to compare, oh, there's an upcoming recession, it must be like 08-09. 08-09 was a credit crisis. It was very, very different. This is much more the usual, recession like we've seen in 2001 or in the early 90s. In those periods, oil demand has still continued to grow.
Okay, and so that's the demand side. Let's get to supply, I suppose. Amrita, what do you see being the next driver on the supply front? I know we've got meetings taking place next week.
Yeah, I mean, look, OPEC Plus are meeting on the 3rd of August. We are expecting a very small increase from the group, continuing with what they have done. Now, of course, technically speaking, they have already unwound all their cuts from April 2020, May 2020, I should say. But they are going to continue to add a little bit, given how tight the market is. The reality is very few of these countries even have spare capacity, right? So even if the headline number is we're going to add 400,000 across the group, the actual volume coming out to the market is half of that, right? So it is something where this is structurally a bullish market where unless and until demand actually declines outright, there just isn't enough supply. I mean, July high-frequency data is showing declines in inventory of over 2 million barrels per day. That's with SPR still coming out of both US and Europe. So imagine when the SPR stops at the end of October. I think that's the thing the market is completely missing right now.